Hello, hola, and namaste from around the world to your classroom. This is Reggie Alexander, and we're here to understand activity-based costing. The basic concept of activity-based costing is a method of allocating overheads to multiple activity cost pools using cost drivers. Let me explain with an example. Z is a car manufacturing company. They produce Model A and Model B cars. The budgeted factory electricity to produce both the models is $200,000. The budgeted factory rent to produce both the models is $50,000. Both the electricity and rent costs are indirect because they cannot be traced directly to Model A or Model B, and therefore, activity-based accounting is useful in this situation. Electricity and rent are the cost pools. Therefore, in our example, total electricity is $200,000 and the total rent is $50,000 are the cost pools. The cost drivers for electricity is the direct labor hours because the change in the electricity cost will be in proportion to the electricity used by labor. In this case, the total labor hours is 25,000 hours. The cost driver for rent is the square footage of the building. The total square footage is 10,000 square feet. Direct labor hours budgeted for Model A is 20,000 and Model B is 5,000 for a total of 25,000 direct labor hours. The square footage utilized for Model A is 6,000 and for Model B is 4,000 for a total of 10,000 square feet. To find out the cost rate per labor hour, we need the total cost pool amount divided by the cost driver base. In our example, the cost rate per labor hour is $8, which is $200,000 divided by 25,000 labor hours. Remember that the budgeted cost of electricity is $200,000 and the budgeted cost of rent is $50,000. In our example, the cost rate per square feet is $5, which is calculated as $50,000 divided by 10,000 square feet. Z can calculate the electricity and the rent with the appropriate rates and can directly trace them to Model A and Model B in accordance with their activity. Electricity costs. Model A cars utilize 1,000 hours of electricity to produce 100 cars. The electricity to produce 100 Model A cars will be 1,000 times 8, which is $8,000. If you take 2,000 hours of electricity to produce 100 Model B cars, electricity to produce 100 Model B cars will be 2,000 times 5, that is $10,000. The rent cost. Model A utilizes 4,000 square feet to produce 100 cars. The rent to produce 100 Model A cars will be 4,000 times 5, which is $20,000. If it takes 6,000 square feet to produce 100 Model B cars, the rent to produce 100 Model B cars will be 6,000 times 5, that is $30,000. Activity-based costing is too data-driven and too expensive to implement. Let me explain it with an example. Let's take another example. Let's say company ABC, yearly electricity cost is $100,000. The number of labor hours worked for the year is 5,000. The labor hours have a direct impact on the electricity bill because without the labor hours, there would not be any electric consumption. The labor hours of 5,000 is the cost driver. Calculating the cost driver rate is done by dividing the electric cost of 100,000 by the labor hours of 5,000, which will give us a labor rate or a cost driver rate of $20 per hour in electricity. Therefore, if company ABC produces a product B, which uses 10 hours of electricity to produce, then the overhead cost directly related to the product B, according to activity-based costing, is $200, which is $20 times 10 hours. Therefore, the basic concept of activity-based costing is to allocate manufacturing and indirect costs to the products you produce. Please feel free to explore and calculate activity-based costing on your own, or check out more about this on Chegg.